As a fund manager, where do you invest your personal money?
My money, which I believe in long term, goes in.
Whereas in your business cycles fund, you have given a significant allocation to. What's your view here?
That is where we are overweight. Can we identify that ecosystem?
Across your majority of the portfolios, I see. Problem is none of the retail investors wants to hold such companies. What's the thesis behind adding them to overweight now?
So this sector also across portfolios we are positive on.
How do you read entire this trade war thing which is happening, and or we can say a decadal opportunity in any of the things?
Yeah. But I think there is a 5-10 year opportunity here where we can find companies.
In this market, the investing style need to be corrected. Your style of investing will suit really well to current market conditions. In such markets, if you have to invest, where are you going to invest?
It is nothing to do with we are saying large cap only you have to invest.
Many Gensols are hiding, which might not have come out. How do they can protect themselves, or if they have already invested, how do they exit from such companies now?
Yeah.
Hi guys, welcome to Money Purse. Let's learn something new today. As an investor, manki bull markets are good, bear markets kuda kontavaraku okay. బట్ లాస్ట్ 6 నెలలుగా మనం చూసిన ఈ సైడ్ వేస్ మార్కెట్ ఏదైతే ఉన్నదో, మీరు కొత్త ఇన్వెస్టర్ అయినా లేదా ఎక్స్పీరియన్స్డ్ ఇన్వెస్టర్ అయినా కూడా డెఫినెట్లీ మీ పేషెన్స్ని టెస్ట్ చేస్తుంది. అండ్ ఇలాంటి మార్కెట్లో చాలా క్వశ్చన్స్ మన మైండ్లో క్రియేట్ అయిపోతాయి. మనం హోల్డ్ చేసిన పోర్ట్ఫోలియో కరెక్టా కాదా, అండ్ ఈ మార్కెట్ కండిషన్కి నా పోర్ట్ఫోలియో ఏమైనా చేంజెస్ చేసినట్టయితే నా పోర్ట్ఫోలియో ఇంకొంచెం బెటర్ రిటర్న్ డెలివర్ చేస్తుందని చెప్పి ఏవైతే మీలో ఆ క్వశ్చన్స్ క్రియేట్ అవుతాయి, ఈ క్వశ్చన్స్ అన్నింటికి కూడా ఆన్సర్ చేయడం కోసం అని చెప్పి నాకేమనిపించిందంటే, డెఫినెట్లీ బేర్ మార్కెట్స్లో బెటర్గా పర్ఫామ్ చేసే ఎక్స్పర్ట్స్ ఎవరైతే ఉంటారో వాళ్ళని ఎవరైనా తీసుకొచ్చి ఈ కరెంట్ మార్కెట్స్లో మనం ఏ స్టాక్స్ని హోల్డ్ చేయాలి అండ్ ఎటువంటి స్టాక్స్ని మనం ఎగ్జిట్ అవ్వాలి ఆల్రెడీ హోల్డ్ చేస్తున్నట్టయితే, అండ్ మన పోర్ట్ఫోలియోలోని ఎలాంటి కరెక్షన్స్ తీసుకొచ్చినట్టయితే మనకి మంచి రిటర్న్స్ డెలివర్ చేయగలుగుతుంది. ఇలాంటి డీటెయిల్స్ అన్ని మీకు షేర్ చేసినట్టయితే హెల్ప్ఫుల్ అవుతుందని రతీష్ వారియర్ గారిని రిక్వెస్ట్ చేశాను. ఆయనకి యాజ్ ఎ ఫండ్ మేనేజర్ 19 years ప్లస్ ఎక్స్పీరియన్స్ ఉన్న డిఫరెంట్ మార్కెట్ సైకిల్స్ చూస్తారు. అండ్ ఆయన స్టైల్ ఆఫ్ ఇన్వెస్టింగ్ ఏదైతే ఉంటుందో, ఈచ్ ఫండ్ మేనేజర్కి ఒక్కొక్క స్టైల్ ఆఫ్ ఇన్వెస్టింగ్ ఉంటుంది కదా. కొందరు ఫండ్ మేనేజర్స్ మనకి బుల్ మార్కెట్లో బాగా, కొంతమంది ఫండ్ మేనేజర్స్ బేర్ మార్కెట్లో బాగా పర్ఫామ్ చేస్తారు. మనం ఉన్న మార్కెట్ కండిషన్ బట్టి ఆ మార్కెట్ కండిషన్కి బెస్ట్ సూట్ అయ్యే ఎక్స్పర్ట్ని మీ ముందు తీసుకొద్దామని చెప్పి ఆయన రిక్వెస్ట్ చేశాను. ఈరోజు ఈ వీడియో ఆల్రెడీ నేను రికార్డ్ చేశాను కాబట్టి చెప్తున్నాను. వీడియో అయితే చాలా బాగా వచ్చింది. అండ్ ఇన్ఫ్యాక్ట్ యాక్చువల్లీ 1 hour లెంత్ వచ్చేసరికి ఎడిట్ చేద్దామా తగ్గించేద్దామా అని చెప్పి ఫస్ట్ అనుకున్నాం. కానీ మల్టిపుల్ టైమ్స్ చూసిన తర్వాత ఏ ఒక్క ముక్క కట్ చేయకూడదు. ఎందుకంటే ప్రతి డేటా ఏదైతే ఆయన షేర్ చేసే ఇన్ఫర్మేషన్ మన వాళ్ళు ఎవరైతే ఉంటారో వాళ్ళకి హెల్ప్ఫుల్ అవుతుంది అని నాకు అనిపించి అసలు ఏ మాత్రం ఎడిట్ చేయకుండా ఈ కంటెంట్ని అయితే మీ ముందు ప్రజెంట్ చేస్తున్నాను. మీరు పేషెన్స్గా నోట్స్ తీసుకొని ఈ వీడియోని అయితే చూడండి. ఈ వీడియోలోని మీరు చాలా నేర్చుకుంటారు. అండ్ మీరు ఏదైతే నేర్చుకున్నారో ఆ నేర్చుకున్న విషయాలు మీ పోర్ట్ఫోలియోలో కూడా ప్రాక్టికల్లీ ఇంప్లిమెంట్ చేయడానికి ప్రయత్నించండి. చాలా కంపెనీస్ గురించి, చాలా సెక్టర్స్ గురించి, ఇలాంటి టైంలో ఎలాంటి కంపెనీస్ పర్ఫామ్ చేసి ఇవన్నీ కూడా డీటెయిల్గా డిస్కస్ చేసాం. ఇంత ఓపెన్గా చాలా తక్కువ ఫండ్ మేనేజర్స్ మనకి డిస్కస్ చేస్తారు. సో ఈ వీడియో మీకు హెల్ప్ఫుల్ అయింది అనిపించినట్టు వీడియోని తప్పకుండా లైక్ చేస్తూ మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీ మెంబర్స్ కూడా చాలామంది స్టాక్ మార్కెట్లో ఇన్వెస్ట్ చేస్తుంటారు కాబట్టి వాళ్ళకి ఈ వీడియోని అయితే తప్పకుండా షేర్ చేయండి. సో దట్ వాళ్ళకి కూడా ఎంతో కొంత హెల్ప్ఫుల్ అయితే అవుతుంది. అండ్ అలాగే రతీష్ వారియర్ గారికి తెలుగు రాదు కాబట్టి మీకు కాన్వర్సేషన్ ఇంగ్లీష్లో ఉంటుంది. అండ్ మీరు సబ్ టైటిల్స్ ఆన్ చేసుకున్నట్టయితే మీకు తెలుగులో సబ్ టైటిల్స్ కూడా వస్తాయి. అండ్ అలాగే ఎవరికైతే తెలుగు వెర్షన్ కావాలో వీడియో చివరిలో నేను ఈ వీడియోలో జరిగిన కాన్వర్సేషన్ మొత్తం తెలుగులో సమ్మరీ రూపంలో కూడా ప్రొవైడ్ చేస్తాను. లెట్స్ స్టార్ట్ ద ఇంటర్వ్యూ నౌ. Hi Ratish ji, first of all thanks a lot for accepting our invite in such a tough markets. Many of my viewers are post-COVID investors. This market definitely testing their patience, because earlier whatever stock they used to invest, they used to do really well. Now even if they are buying good quality companies, even if the company is delivering good earnings, stocks stop moving. This definitely tests their patience. Not only that, when a SIP investor is also seeing a negative growth, so in such market I felt if I can bring expert like you to my platform, it will add a lot of value to their investment style. If at all if they are doing any mistakes, they can correct it to such markets, because bull market is something different, whereas in this market the investing style need to be corrected. Yes. And I understand your style of investing. I feel your style of investing will suit really well to current market conditions. So that's the reason I've invited, and thanks a lot for accepting our invite. Before we start our conversation, let's make it very clear. Guys, we have no commercial relation with the fund house which he is representing. This video, our intent of doing is to give that investor education so that viewers will get to know what need to be done properly and they can correct their portfolios. So thanks for accepting.
Thanks for inviting us.
I'll come to the straight away first question.
Yes.
See, now the markets are in a different mood altogether. In such markets, if you have to invest, where are you going to invest?
So I'll tell you, last 5 years, I'll just take, because you mentioned COVID, right?
Yes.
Very interesting period. Last 5 years, everything was in favor.
Yes.
Favorable government policies, favorable earnings trajectory. So if you look at last 5 years data, 5 years of small cap, mid cap, including large cap, had an earnings CAGR, let's say from 19 to 24, had an earnings CAGR somewhere between 15 to 25%, depending upon cap curves. That kind of returns came through in markets, right? So small caps had 25%, mid cap also had nearing 25%, and large cap was somewhere between 14-15%. That is because of the earnings delivered, because of favorable government policies, favorable balance sheets, etc. Why it happened? Let's take a little deep dive to understand why these earnings growth came through. If you break up the earnings growth, it is sales growth and profit growth, right? Sales growth generally mirrors a nominal GDP growth. And if you look at 5 years of sales growth, nominal GDP growth, let's look at it, was between 10 to 11%, and your sales growth also hovered between 10 to 12%. But what gave that additional 10 to 15% CAGR growth in earnings was the profit margin expansion. That is, two factors led to that. One is your operating leverage play through. When I'm saying operating leverage is, lot of capacities got utilized, right? So a lot of my cost saving happened because of COVID and various other utilization benefits. At an operating margin level, there is an expansion. Second, if you look at the previous decade between 2010 and 20, this entire system was leveraged, whether it is government balance sheet, corporate balance sheet. If you remember 2017-18, somewhere there was IL&FS crisis, etc. Balance sheets started getting delivered from 2017-18.
Yes.
That also played in favor. So between 2019-24, if you remember 2020, I think just before COVID, etc., Reliance delivered as balance sheet, right? It's a start. So every corporate, whether it is large cap, mid cap, small cap, and as let's say between 2023 and 24, markets became further favorable. Lot of small and micro and SME companies also came and raised money in the market and they delivered the balance sheet, right? So that 4 years, 5 years, both the operating margin expansion and your interest cost savings led to further increase in earnings growth. So that 10 to 12% sales growth got converted into 20-25% kind of earnings growth. That is what got delivered in stock price returns, right? Now, if you go ahead, the problem here today, what you asked, no, earnings growth is happening, etc. It is a mindset. Mindset of can that 20-25% earnings growth continue? Ask any company today, it is very difficult for them to keep growing that 20-25%, right? Because they have achieved that optimal kind of utilizations and balance sheets are completely delivered. If you look at India today, the benefit here is none of the balance sheet are levered. India's balance sheet, corporate balance sheet is completely delivered. If you go to previous cycles, whenever previous decade or decade before that, the problem India faced is corporate balance sheets were levered. That is not the case today, right? Now, so that is also has a disadvantage because there is no operating deleverage from interest cost. So if somebody is assuming that earnings growth can keep compounding 25% year after year, that will not happen. What will happen? Your nominal GDP growth, revenue growth, and your operating margin growth, everything will converge over the next 2-3 years. Till that mindset is not framed in, because you mentioned, right, a lot of your investors have come in COVID period. They have not seen that because last 4 years has been a very strong earnings growth. As they feel that, as they get secured with that, saying that, oh, now no more you will see that fancy earnings growth. You will see 12 to 15% kind of earnings growth. Till that mindset doesn't come in completely, your markets will tend to be volatile because of the expectation. That is what we speak about valuations are high, right? Valuation numbers, they are numbers, denominator, numerator numbers. These actually forecast the sentiments in the markets, right? So when valuations are high, that means people are assuming that earnings growth will be higher. So that valuations that sentiment has to correct, right? When sentiment has to correct, and generally in next 12, 24, 36 months, sentiment correction happens, then what we should do as investors, simple. look at companies who will still deliver more than nominal GDP growth. Number one. How you will identify those companies? Simple. Look at companies who are leaders in each category. They will be able to deliver that earnings growth not because of operating leverage, but because whatever last 5 years of cash flow they have accrued from the growth, that they will reinvest in that same business. That cash flow reinvestment in the supply chain or in the forward sales, etc., that can help them to see higher growth than the industry growth, right? You see decadal any industry, the leader, whatever cash flow profit he has from that industry, when he reinvests faster than any other player in that industry, he gets a leap advantage of 2-3 years compared to any other player
Can
in
you
that industry.
explain this with an example? Any of the company which you picked up in your portfolio?
వన్ సెకండ్ గైస్, ఈ క్వశ్చన్కి ఆన్సర్ వినే ముందు ఈ ఎక్స్పర్ట్ సిరీస్ ఇంటర్వ్యూస్ మీకు హెల్ప్ఫుల్ అవుతున్నాయి అనిపించినట్టయితే ఇంకా ఇలా కంటిన్యూ చేయాలి, మిగిలిన ఎక్స్పర్ట్స్ని కూడా తీసుకురావాలంటే కింద కామెంట్ సెక్షన్లో ఎస్ అని కామెంట్ చేయండి. సో దట్ ఎంతమందికి ఎక్స్పర్ట్ సిరీస్ ఇంటర్వ్యూస్ మీద ఇంట్రెస్ట్ ఉన్నదన్నది అర్థమవుతుంది. అండ్ అలాగే ఈ వీడియో నచ్చినట్టయితే మేము అడిగేది ఒకటే, ఈ ఛానల్లోని వీడియోని లైక్ చేయండి. సో దట్ ఇలాంటి ఎఫర్ట్ బ్యాక్ టు బ్యాక్ పెట్టి మీ ముందుకు ఇలాంటి కంటెంట్ తీసుకురావడానికి మమ్మల్ని ఎంకరేజ్ చేసినట్టయితే అవుతుంది.
So currently we don't have it in the portfolio. Let's take a paint industry example, right? Let's go 15 years back. I will not name exactly the companies if you don't mind, but the largest player, everybody knows that. His cash flow pool of the industry, he had more than 50% market share. What he did, he backward and forward integrated his company over the next 5 years. That cash flow he used to reinvest in his distribution network, to invest in his technology, to invest in his products. So let's go back to 2003, 4, 5. The number of SKUs for that company, what he had in his paints, in terms of colors, designs, etc. And what he did after 5-7 years was completely different in terms of 5x more SKUs he launched, 5x more distribution network he launched. He penetrated to more 10 cities, and because of that, he went 5 years ahead of any other company in the industry. So he got that 5-year advantage. So what happens when growth normalized? Let's go back to again 2005 and 10. When the paint industry growth normalized post 2010, still he was able to grow 2-3 percentage point higher than the industry because he had more SKUs. Somebody who genuinely did not want to paint his house, but still he saw some attractive color and design. He said, "Let me paint my house." Or somebody, let's say in the interior of India, he was not having an access 5 years back. Today he has an access to that paint dabba, we'll say, that he was able to paint. So that was giving them additional levers. So that 2-3 percentage point of additional revenue growth got converted into some kind of operating leverage, right? So that also added another 100-200 basis point or 1-2 percentage more of operating profits. That is what played out in that industry. What we are seeing across industries will play out over the next 3-5 years.
But problem is when we talk about that particular stock, Asian Paints for that matter, okay, it has done well in previous cycle, but in last cycle, investors have not made money, and we are seeing new competition entering and post new competition entering. In fact, it is becoming more painful. So
a disclaimer: we don't have it in the portfolio, right? What I'm trying to explain to you, what you mentioned, and where we should look at today from a market per se. What I mentioned to you, you should look at leaders. I just gave an example in one of the industry last 15 years, how a company becoming a leader.
Okay, you mean to say because 15 years back, whatever they have done, because of that, in last cycle they have performed really well.
They have performed well. This is classic what you're mentioning, competition, etc. coming through. It's a classic example of any industry. Any industry, when the leader invests and then he sees growth, this will happen even next 5 years down the line.
Yes.
As we're saying today, we should look at leaders, right? Any industry, when the leader is reinvesting his cash flow in that same business and he's taking advantage of that and he's increasing his market share even further, he will be able to expand his operating margin and return ratios from what cash flow is investing, right? 5 years down the line, I'm just going a little forward. 5 years down, what you asked, 5 years down the line, as he's making a very high visible ROCs, right? Whether it is 30%, 40%, 50%, there are large corporate houses or large companies who are noticing that in the numbers. That is when that data points attract that corporate towards that industry. That is what you saw in the paint industry, right?
Yes.
High ROCs. So now, not only that leader, other players also will copy him who are existing players. They will also start making that high ROCs. That high ROCs and high valuations right? P is what, 60, 70 P. That attracts large corporates, private equity funds to come and invest, saying that there is something here which needs attention, and they start putting their investments. That is where any industry cycle it is. But where we are in markets today, we have seen large earnings growth. Whether this is the first player in the industry, the third player in the industry, fifth player in the industry, because what we spoke about operating leverage, everybody had a very strong earnings growth. Next 3-5 years, because there is limited operating leverage to be played, we have to look at leaders in terms of investments. And this goes across cap curves. It is nothing to do with the large cap. Leaders, because a lot of emerging sectors, the size of that sector will be small, right? Let's talk, you mentioned paints, let's say cables and wire industry. It's a large upcoming industry in India. That industry size itself is small. The leader of that industry, it's not a large cap. It's either a mid cap company or small cap company. So what I'm trying to say, it is nothing to do with, we are saying large cap only you have to invest. Large cap, mid cap, small cap, all. But look at leaders. And now not only leaders, but who are reinvesting that cash flow same to maintain that leadership. That next 3-5 years, they will stand out, right? Okay. Simple, we are that what I was alluding to my colleague, we were on the national highway last 5 years, riding at 120, 140, 180 kilometers per hour. No accidents, because it's a plain, smooth highway, very fine. Now that national highway is over now. Now we have that NH, will get converted into, you have to be nimble and humble. You have to invest in companies who are very nimble, leaders, and very humble in terms of reinvesting in their same business year after year. That is where you will see that disproportionate compounding opportunity. I'll just give you one more learning, what for investors they have to do. I think Warren Buffett has also famously said that, and a lot of investors say that the power of compounding. Stock market is about power of compounding, right? Last 5 years, it was not power of compounding. It's buy anything, doubling every 6 months, 12 months. Now you have to come back to power of compounding. So when you have power of compounding, you have to focus more on balance sheet, cash flow, not only on P&L. Deep research has to be required. And you invest in companies who are leaders who believe in that power of compounding, right? And that is where the journey has to be for investors.
What valuation metric you look into any of the companies which you pick in portfolio? Your favorable valuation metric?
So all these numbers, whether let's look at price to equity, right? How you justify a 30 price to equity or 10 price to equity, 50 price to equity, anything can be a true value. Classic examples of companies whose valuations are very high, 10 years back, now also their valuations are high, still they have been one of the best performers in stock market. People say valuations are high, don't invest. I'm not so sure. What is the metric you should look at for more than valuation? So there is two elements to it, right? Price to earnings. Or even by EBITDA also you look at enterprise value divided by EBITDA, right? EBITDA. So that EBITDA and earnings growth is what you have to look at. That is what I said now. Last 5 years, everybody's earnings growth was very strong. So P doesn't make it a sense. Anything and everything was expensive. Now that E is getting questioned. Earnings growth is getting questioned. So focus has to be E. So anybody says, should we look at a 10P, 20P, 30P, 50P? It doesn't matter. Like I have seen companies whose P's has been 10P. They have remained 10P forever. That is because the earnings growth is only 2-3%. So if you look at P of 10 and earnings growth of 2, they become very expensive, right? If you do that PEG ratio of 4-5, it is. A company let's take a company who's grown by 30% year after year. If his P is 50 and you compare a company whose P is 10 and the earnings growth is 3, 50 divided by 30 is cheaper than 10 divided by 3, right? True. So you can't look at only valuation as a number. You have to look at earnings as a number. When we are saying valuations are expensive today, why we are saying is, as I said earlier, alluded to, last 5 years, what has happened is everything has moved up because there is a generally positive earnings environment, right? A leader in the industry, the fifth player in the industry, everybody can't trade at the same earnings multiple. That is because a decadal growth can't be same for them. Last 3 years, their growth might be same, but as you enter the next 3-5 years, the growth differential will come. That is where we say valuations are expensive. So today, even if valuations are expensive for leaders, it's okay because they will deliver their earnings expectations for you. But the fourth or the fifth player in the industry, they might not be able to show you that kind of earnings growth. That is where the valuation is expensive.
In your conversation, you said that E is getting questioned, right? Not only on the growth part. Now, in few companies, the E itself is getting questioned whether it is realistic or not. The example is Gensol, kind of a an issue. Many investors, retail investors, got caught in such companies.
Yes.
Have you got such companies? Like you would have assessed many companies like that. You would have assessed this company also. Okay. When you are assessing such companies, because it's a new emerging theme, solar, EV, everything,
Yes.
so the growth rates will be exponential. So when it is a new emerging industry, automatically we don't look at E, we look at the growth, the G part, and we get into these traps. So how do a investor avoid such traps? Because that is also very big lesson any investor need to learn, because one Gensol we saw now. Okay,
Yes.
people ran behind G, the Gensol ditched them, but many Gensols are hiding. Okay, which might not have come out. Okay, how do they can protect themselves, or if they have already invested, how do they exit from such companies now?
So let's go back again, right?
Mm.
10 years back, there are a lot of corporate leverage issues, if you remember, right? One good thing about equity markets is you get an exit. Even if it's 50% lower, 60% lower. You saw that episode happening in fixed income, right? Where people are stuck with their money because default happens, you don't get the money. At least equity, one thing I can say, you get an exit. Even if it's a 70% loss, 80% loss, you get an exit.
Yes.
Even though you don't get a capital back, at least 20-30% of a capital back overnight you can get, right? So that's a disclaimer. Investing is not about looking at earnings. When we say earnings, people look at the PAT number or EBITDA number and they say, oh, this company is good, right? That is how even what you mentioned, company names, whoever, they also talk about that only, which they want. See, let's say anybody who's coming on TV or any promoter is talking, he will never say negative sides of his, right? He will only say positive sides of it.
Obviously,
it is not in
fact,
bad
actually,
intention.
Before he's selling, he came to television and he said he's buying.
So, no, not that example. I'm saying nobody has any bad intentions, right? Where investment requires, so it is, investment is not just seeing something and investing. It requires deep understanding of that whatever. So classic theory in last 100 years of good investment books, they say, right, buy only what you understand. Same thing comes even into documents what you look at. Just PAT number you should not invest. This E, E has lot of multiple elements to it. It is not only profit growth, because P&L, if you look at our accounting, it is accrual accounting, right?
True.
It is not actual accounting.
Yes.
The cash flow and the balance sheet is actual accounting.
True.
You look at working capital, for example, for a lot of companies, over the last 4-5 years, 2019, let's say their working capital was 50 days, let's assume. Over the last 5 years, their working capital has gone from 50 days to 250 days. But the earnings growth has been 25%. And then, is it a good company? I'm not so sure. So what I'm trying to say is that E, what we look at from, that is why I'm saying P is just a number. P, it should not be an only isolated framework you should look at. Price to cash flow from operation, cash flow operations, conversion, EBITDA converting into cash flow from operations, and that cash flow from operations, they are getting reinvested. What we should look at is not accrual P&L accounting, it's accrual actual cash flow and actual balance sheet. That is what differentiates you from any, investments from, let's say, boys and men, you say, right? In what people think, no, that is another mistake people make. Today you invest, next 3 months, this stock company is not doing anything, right? Let's look at even we all in our field, let's look at agriculture and industry today, right? A farmer, every year he should not have a favorable cycle, right? That doesn't mean he stops farming and he goes somewhere else, right? For him, a lot of favorable things has to fall in place, external things, favorable rainfall, favorable policies, favorable fertilizer, etc., etc. Same thing is even in investing. Even you're putting money in your company, that company also requires time to execute. So 2 things you have to watch out for. The first thing is, do you have that time frame? Not we as investors, the company has that time frame to do the same thing for the next 5-7 years. Second, is it their earnings are getting converted into actual earnings? If you are able to see that conviction is there, then is when you don't have to worry even in this volatile markets, right? Markets, see, market is a place where crores and crores of investors come and go. Let's say you and me today, we have a fight at home. Our mood might not be good, right? So we might behave irrationally in the market. But actual market, if you have a 5-year period, any analysis, anywhere you look at globally, market price is equal to earnings growth. And earnings growth is not the PAT growth. It is that cash flow growth, balance sheet growth, etc. Multiple levers for it. Simple. These two things, if you have in your mind.
So you mean to say, suggest the investors don't just look at the E part,
Yes.
look at the cash flow part.
Yes.
Okay, read cash flows.
Yes.
And also look at the balance sheet. The
Yes.
serious elements which we need to take out of the three statements: cash flow statement and the balance
Yes.
sheet statement.
Yes.
Yes, E we need to track, but investment decision has to be
Yes.
done based on the cash flow and balance sheet. And
Because I'll tell you, like you gave a couple of companies example, right? Look at last 20 years of Indian stock market history only. There are very few companies actually from a micro cap, from a small cap, became a mid cap and became a large cap, right?
Yes.
The reasons. Every day you hear story, this company will become 5x, 10x and all, right? There are very few instances. That is where more focus has to be, attention has to be paid on companies actually, that conversion of actual earnings to cash flows to balance sheet has to be paid a lot of attention, and it is a lot of hard work, bottom up hard work, where out of 100 companies, there will be only 1 or 2 companies actually they will pass through that, go through that journey, right? So in our investing, we do 2 types of investing. One is long-term compounding investing, which I just mentioned. I try to identify that gems who can compound from a small cap to mid cap to a large cap. Some tactical investment we do when we say, no, kind of, let's say in our portfolios, for example, 6 months back, 9 months back, we went overweight on financials, large cap banks. It is a tactical move. Why we did that is because we felt somewhere that, as we are discussing for last 10-15 minutes, earnings growth will normalize. Mind expectations have still not normalized. Large banks, if you look at their earnings growth was anyhow single digit to mild double digit, right? So valuations were not that heated up. So that was the point, pocket where the valuations are favorable, and it's a place where there is safety, kind of, right?
True.
That is where we say that that is a tactical investment. The first part, what I mentioned, it requires a lot of hard work to get those multi-billion ideas, which can, multi-baggers, which can, over the 10 years period, keep compounding. So these are 2 different buckets. That is where we come into picture, where we take a balanced approach of both tactical investments and compounding opportunities, right? That is how investments we go. Last 5 years have everything. The third element has also worked of narrations. I think that is now away. These 2 is where the focus should be on.
To make it simple, now what you are saying is, don't look at the news items.
Yes.
Whether the order book or
Yes.
order exchange filings which gets
Yes.
come in,
Yes.
or some tie-ups and all. Instead, focus on only the cash flow and the balance
Yes,
sheet
yes,
part. And
completely agree.
those are the companies which are going to deliver returns
Long-term
now.
compounding. And this is a good time actually. We asked now what investors should do. Now, we have seen classically in cycles, retail investors specifically, they come in these bull markets, they initially make money, right? Let's give an example. Somebody who has invested 100 rupees, that in 6 months would have become 150 rupees. Then वो हिंदी में बोलते हैं चस्का लग जाता है, right? वो चस्का लग गया, पैसा बन गया, then that entices him to come more. So again he puts that 150 rupees, he says, let me put more. That 150 might become 200 also in the second time he invested, right? He's further happy. Mera 100 cut became 200 in, let's say, 1 year. He's very happy. But now what is happening? That 200 would have already become 120. Now in his mind, he's, oh, now my cost should not be breached. A lot of investors, their cost would have also got breached. It would have gone below 100. They would have sitting at 90, 80. There will be period of time for 6-9 months. It will not cross that 100 rupees, right? So then what that mindset will be? Oh, let my 100 rupees I'll come and exit, right? That kind of market it was last 5 years. A lot of people, investors who have come new, they will lose money in next 3 years, whatever they have made. In fact, they will lose more, and they will just hope that whatever capital they've invested comes back and will exit. Then they will say, what is stock market? I have not made money, right? But what I'm trying to say, this is the time, good time to invest, because here, as I said, you will find differentiation. Leaders will actually start doing well without looking at P. If you're able to focus on companies who can compound much higher, the real investment of power of compounding is what you can make here now in next 5 years. This is the time. Do some hard work, invest in either any good fund or invest stock, whatever you want to do.
Yes.
You can make that power of compounding without focusing on 6 months, 9 months of news-based investing.
True. And when you said your portfolio also has a tactical piece of it,
Yes.
okay, in current market, which are the tactical pieces which you are looking into? If you cannot name the companies, at least you can name these sectors, right? So where investors can study.
Yeah. So near term, I mentioned about financials is where we feel that, especially lending financials, is where we feel there is opportunities. If you look at any sector, If you put their last 8-10 years of earnings growth versus what you mentioned about P or price to book, whichever you want to look at, valuations are lower than historical valuations. Second, the growth rate might be a little lower, but still the gap is significant. So there is a safety net kind of in terms of financials across portfolios. We overweight there, number one. Second, from a long-term perspective, where what I mentioned, power of compounding, where there are opportunities from a sector per se. India, if you look at the biggest advantage what India have is young population, right? When we say this demographic dividend, etc. What is that demographic dividend? We are not going into per capita income and all that separate. That has multiple arguments for and against that. But it's the aspirational element. It's a young population. Because of lot of global content today available for them, they are seeing lot of lifestyle changes, right? It was not like our grandparents, parents today, the next generation, what they are much more exposed to global world.
True.
So the aspirations are different.
Yes.
That is where the opportunity is for investing. Okay. Aspirational content going up. So it might not be people saying that I am going and buying a 1 crore rupee car. It is not that, right? At the same value, they want a better car. For example, when we are talking about vehicle or mobility space, right? That is where the opportunities, and it's a 10-15 years. If you see our demographic profile, for next 10-15 years, we are the only country who is in favorable zone from a demographic profile per se. All the global companies who are aspirational companies, who target these aspirations, they all are looking at investing in India to sell their products, right? So this space in financial sector parlance, we call it consumer discretion in a simple way. But I think there is a 5-10 year opportunity here where we can find companies who are targeting the aspirational element of those consumers, who are able to fulfill their aspirations, right?
Nice.
It runs into anything.
Examples.
Yeah, it runs into everything. Food, or daily food, what you consume. Earlier, during my parents' time and all, it was daily consumption of idli, roti, etc., right? From a breakfast poha. That moved from our side to breads. Now it is moving to a lot of health snacks, what you call millets, right? All these multiple things. I just give you an example. So this is happening across. Like when we say jewelry as an industry, earlier people only talking about wedding jewelry. Now it is no more wedding jewelry. People are talking about fashionable jewelry as a content, right? So the aspirations are moving. Was women consumer today is
you have
employed.
significant allocation jewelry stocks.
Yeah, because women consumer today is no more sitting at home. They are employed. They have also an aspiration today to do a fashionable jewelry, right? That is an aspirational element. A lot of companies are trying to target that as a segment. Can I give a designer jewelry, which companies also make more money, and also consumers also satisfied by getting better or little differentiated designs, right? So across sectors it goes. Food, what you wear, the lifestyle, the homes. Look at 10 years, 15 years back, simple 1 BHK, 2 BHK apartments if you look at. People are happy by that. Now people are asking for much more. Is there a swimming pool? Is there a club, etc., right? That is next 10 years. Every consumer sector, companies are able to up their portfolio. That is where the opportunities are, right? So if you look at in food, what we mentioned, nobody has a time today to go and cook on a daily basis because everybody, it's a nuclear family, everybody is employed. QSR companies, right? You mentioned about jewelry companies. Like that, every segment.
Yeah, I saw you have given significant allocation QSR. Okay,
Yes.
QSR, yes. Definitely, QSR is a space we can see a long-term growth, but they are struggling in last 3-4 years. So, what's the thesis behind adding them to overweight now?
So, before going to QSR, no, let's look at any consumer industry. Okay, let's look at again automobile industry. Lot of global giants came into India, and they were of the hope that India is underpenetrated market. You will keep seeing that 15% volume growth, CAGR, etc. If you look at last 15 years, mobility industry, whether it is two-wheeler, four-wheeler, any industry, the volume CAGR has only been lower single digit, 3 to 6%, depending upon segment to segment.
Yes.
What has played out there, what I am talking about, the aspirational element. Let's look at a four-wheeler, no? People have moved from a Wagoner to Swift Desire to an SUV. Today, everybody wants an SUV, right?
Hardly nobody is buying hatchbacks.
Nobody.
Yeah,
It's
even
all SUV.
automobiles are also not launching anything less than 10 lakhs.
Yes. And that is the one thing. Second thing, what has happened is MNCs, why they missed out, MNCs today in India from a mobility four-wheeler space. Because look at Indian OEMs, why they have been successful is they have opened their dealership pan-India, right? So what I'm trying to say, there are two types of stories you play in a consumer sector. The first is the premiumization element, how you move up the value chain, which I mentioned even in food, moving from a poha to a millets, right? That's a moving up the value chain from a price point, I'll say. There is a second element to it of urbanization, new store opening, like what a Maruti does. He every year opens more dealers, go more penetration in the market. QSR industry, if you look at, same store sales growth might be weak. What that people are looking at, it is not the same store sales growth which keeps happening double digit. That is like any other consumer sector, it happens only at a single digit or lower single digit level. There are two things play what I mentioned. One is new store opening, right? That is where the growth is. If you break up the growth, 60 to 70% growth will be the new store opening, which we call it a classic case of urbanization, new cities getting developed. Let's look at Andhra Pradesh as a state, right? It has got split. One more capital will come up within this, right? So look at more cities are getting developed. That means, let's say any QSR, he has more places to go and open his stores, right? So that is an urbanization story. Second, within the QSR, they have options to upsell you more products. Might be they are selling a pizza instead of 200 rupees, 100 rupees, but they are trying to take more wallet share from you. More than only selling pizza, can they sell a coffee to you? Can they sell some walnut to you? Whatever, right? They are trying to increase that per customer billing. That is what our bet is on. So last 3 years, what we are seeing growth has been weak is on the SSG front. But if you look at all the listed companies, they are still doing that urbanization, opening new branches where their growth is coming, and they upping their wallet share from per customer, right? And we are positive. We feel that over the next 5-7 years, that can keep compounding, and that is where the opportunity is for a power of compounding there.
And coming back to the auto part, which you have spoke, I saw you have M&M in the portfolio, and you are also speaking about the content in the vehicle.
Yes.
Okay. Where do you see bullishness in content in the vehicle? Like,
so if you look at two subsectors, let's look at, right? Same thing what I alluded to, the aspirational, in Indian consumer, the aspirations, right? What we talked about, Wagoner to SUV, why people are moving. It is not the price point alone. What has happened there is, people want more gadgets inside the car and more smooth features in the car, right? Because of aspirations, looking at global cars, etc. But at a price point. You can't charge them at a premium price. And what are OEMs doing? Whether it is Maruti, M&M, whoever, they are engaging more auto ancillary companies. So we are positive on auto ancillary as a space from a multi-year decade theme. On this first aspect,
auto ancillary.
Yes. Okay. Because more contents are coming inside the car, right? It's no more a steering wheel and a basic seats, right? There are multiple lights, multiple gadgets. Your engines are becoming much more efficient for a smooth drive, etc. Accidents, etc. is coming down, other than whatever political statements are there, right? So that one segment we are very positive on because of Indian consumers' aspirations. My per car content is going up, that itself will give you a compounding opportunity. Outside that, if you look at global environment, today if you keep this tariff, etc. aside for the moment, last 10-15 years, Indian auto ancillary companies have showcased their capability to produce goods based on what the OEM requirement is, right? If you look at a lot of companies, go back to 2000 and 2010, they went and acquired a lot of companies in Europe and they suffered, a lot of them suffered. That is where we spoke about initially story of leverage, right? They all have delivered their balance sheets, but the capability has not gone away. A lot of these companies have capability. Any company sitting out of Europe or South Asia or sitting out of US, to make basic contents, the cost of content production in their own home country is very high compared to an Indian auto ancillary, right? So they are tying up with the Indian auto ancillary companies not only because of the cost, second what I mentioned about capability, both the C's are in their favor, right? Even if they now start charging more, that is okay because they are able to showcase their capability. And so that is a multi-decade opportunity because it's India. If you are seeing a 2-3% volume growth, globally also you will see a 2-3% volume growth, but there also content is going up and Indian ancillary players market share is going up year after year, right? That is where the opportunity is.
Can you have few examples? It's not a like investment tips, but people will have understanding on which kind of companies need to study.
Yeah, so if you look at Sona, Comstar kind of company which are there in a portfolio, disclaimer that we're not recommending that.
No,
or company which is not there, let's say, which is not in our portfolio, companies like Motherson, Sumi and all, they are over a decade now, they have built capability in certain technology or certain products. Whether it is plastic bumpers, your lightings or
Radars.
whatever it is, or
Radars.
motors, radars, etc. There are either technology advantage they have or product capabilities they have, right? And it is not they are engaging. A lot of global OEMs are engaging with them and saying that why don't you partner with us in our new R&D and existing models as well. So there's two opportunities there. One is existing models where you're gaining share, and in the new models, I'm able to participate in their new model growth journey, right? So there is a lot of opportunities here, power of compounding, what I mentioned. So this sector also across portfolios, you are positive one. You will get a lot of ideas which can keep compounding from both cash flow and balance sheet per se.
Okay. And one more question in your business cycles fund.
Yeah.
I saw there is a contra sizable allocation. Okay. Now market's perception is because of this trade wars and all, US will suffer.
Yeah.
US will see recession because of that. Our IT companies is going to suffer and all. But whereas in your business cycles fund, you have given a significant allocation to IT. What's your view here?
So if you look at now, I'll cover about my business cycle fund specifically, but look at IT sector. Let's go back to 2000 and 2010, right? So what IT sector, the prevalent thing is, one is rupee depreciation of 3% on an annual basis, cover ups there, whatever the growth is there. That is number one. But second, what is the core focus area has to be the dollar revenue growth what these companies showcase, right? So if we go back 2000 and 2010, that decade, every large cap IT companies were showcasing anywhere between a higher single digit dollar revenue growth to a double digit dollar revenue growth. Post Lehman crisis, all that happened, there is a kind of a wave of digitalization, cloud, etc. Right? If you look at that, actually brought down these decadal growth. So from 2000 2010, what you saw as higher single digit to a lower double digit growth, that came down a notch, 200-300 basis point to higher single digit growth or a lower single digit growth, right? So you're working between 6 to 9% growth, dollar revenue growth. They all showed good growth is because of rupee depreciation, operating leverage, etc., etc. But I'm focusing on dollar. That is because of technology got shifted. Now over the last 4-5 years, there's a giant technology transition which is happening in terms of what we call artificial intelligence, etc. Programming, nobody knows how much it is required today because of all these DeepSeek, ChatGPT, etc., whatever is coming through, right? But one thing is very clear, growth rates will be lower unless and until companies are not able to invest, reinvent themselves, and companies are large enough, it takes them time to reinvent themselves. So when we are saying between 2000 2010, you had a double-digit growth, you move to a higher single-digit growth in last decade, you will move to a lower single-digit growth in this decade, right? That is the issue. What we spoke about IT as a sector is nothing to do with recent tariff, etc., near-term recession. It's more of a structural issue. Now coming to business cycle fund, where we are overweight on information and technology, we are not overweight on these global outsourcing businesses. We believe today in India, there is a decadal opportunity. 5 years back, because of the digital revolution, the data revolution which happened in India, more than 80 crore people have access to data today, right? What are companies looking at doing? Monetizing that. Either selling their products online, number one, technology companies helping them to sell online. You're seeing so many platform companies, etc. coming, right? So these are not only platform companies who are selling you products. There are technology companies on the back end helping these platform companies and helping these consumer companies in terms of converting the consumer, not only from viewing, but to convert that viewing into buying. There are a lot of technology companies who are there in our portfolio who help the company. Let's take an example. I'll not name the company. That company works with a garment manufacturer, for example. You and me, we keep searching for shirts, shirt for men on Google. The minute you find some good shirt, you keep searching. The company backend, because he has tie up with whoever, Samsung, etc., they have your database, right, with Google, etc., including Google does this. They know your consumer behavior. The next time when you open your Google, the first thing they'll show you these ads, right? So that is technology. They are trying to see what is your customer preference, and they keep pushing you, nudging you towards this. That is a digital revolution, right? They are monetizing your time through digital, right? So that's a decadal story. You go back 5 years back, simple, on digital platform. 5 years back, nobody wanted to pay, even for 2G data, nobody wanted to pay, SIM, nobody wanted to pay, right? People are bargaining in a local shop, 10 rupees per minute or 10 seconds, whatever the number is. Today, if you look at average monthly bill for a consumer is 200 rupees, there is no question about that, because data has become part and parcel of your life. More than your house, people, data is your life, right? You get up with the phone, you sleep with your phone, right?
Yes.
So that is where the revolution has happened in terms of digital being your daily part. That is where we are overweight. Can we identify that ecosystem? And that is a decadal team. That is what we are playing in business cycle. Can we identify that 10-year,
Not
15-year
the IT
cycle?
outsource
No.
companies. Okay.
We have some part of IT outsource exposure. There are also niche exports. What you gave an example of, I gave an example of ancillary players who are looking at building the content. There are a lot of technology companies in India who are working with these global OEMs, right? Because today a car you go, it no more you drive it, you talk to it, right?
True.
So that is a technology involved there. So there are a lot of Indian IT companies who have showcased their capability to show the content in the car, right? What more value addition they can do. Not only from talking to the car, driving itself, the autonomous driving, whatever we call it. Those all technology Indian IT companies have developed. They are working with a lot of global OEMs, and that's again a decadal theme. This is a theme of one is digital revolution. Second is technology transition, which is happening, right? Either fuel transition or what I said, talking to the car, autonomous driving, etc. Indian technology companies who are smaller or mid-size, they are working with a lot of these OEMs to work towards it. That is where we find there are a lot of pocket of opportunities to invest and make that power of compounding there.
Okay, nice. When you spoke about data, one question came into my mind.
Yes, please.
Across your majority of the portfolios, I see significant allocation given to Bharti Airtel.
Yes.
So the reason is the same, and Bharti Airtel saw a consistent growth in stock price as well. Are you still comfortable because you hold a large stake there?
Yeah, so I will not comment on valuations, etc. But what I talked about data, right? Let's say today somebody is paying 200 rupees per month. If over a period of time that 200 rupees become 500 rupees, 600 rupees also, I'm not so sure how many people will question it, right? Because that's become part and parcel of our life.
True.
Only what can question there is competitive intensity. Now, if you see over the last decade, because of a lot of factors, the industry has got consolidated, right? There are some people say it's 2-player or 3-player, but it is now come down to 2 or 4-player industry, right? So there is a pricing power there and consumer requirement there, right? Now it's become daily part and parcel of your life.
True.
I'll give you an example. Any consumer product what we use today, whether it is a toothpaste, whether it is hair cream or any food, the gross margins what those companies make are upwards of 50 to 60%, right? Nobody questions that because it's a required product in our livelihood, right? Same thing, data has become a livelihood requirement with a consolidated market share, right? So just imagine the power of compounding over a decade it can play through, which was not true previous decade because no consumer wanted to pay, number one. Second, there was significant amount of competition in that space.
Problem is none of the retail investors wants to hold such companies.
Yes.
These are fantastic companies.
But I'll tell you, that is where the classic theory, nobody should forget the classic theory of investing. What you use, you should invest. The maximum number of time what we do is in mobile phones, right? Why not invest in that? I'm not giving again a disclaimer. I'm not telling you to go and invest.
No,
that's the way the approach should be.
They take this content as a study purpose.
Yes. So that is where the approach should be, right? Our lifestyles are changing. As I said, aspiration, our lifestyle is changing, mobile, then why not look at those investments, right? Why to avoid those? Why to go for complex theories and all? Simple theory, keep it, no?
Okay. And one question on the trade war front. Okay. Many people says India will have advantage. Few people says in sectors India will have disadvantage. Okay. How do you read entire this trade war thing which is happening, and how are you playing? If there is anywhere you see advantage there where India can or Indian companies can, or we can see a decadal opportunity in any of the things.
Yeah. So I'll just take 2 minutes. If you look at this, all this, what is happening now? Again, let's go to COVID, right? COVID, entire world shut down, right? For whatever 12, 18 months period. There was free money getting distributed among citizens, either in developed markets, emerging markets, everywhere. And markets went up, right? So there was a inequality or the disproportionate income inequality effect happened. It is not only prevalent in any individual country, it's prevalent across the world. Classic signal of that is government change has happened across the world, right? And this is a classic theory. It always happens in last 100 years whenever such mega events happen, whether it is a financial crisis, healthcare crisis or a war crisis, etc. But fallout of that is what? Governments want to maintain their power or they want to retain their seats. They try to increase their income or they try to create these political instabilities, right? That is what war, etc. is happening. People sell their weapons, and generally also because he wants to retain power, there is an ego issue, etc., etc. That's a classic theory. That is why, for example, 12 months back when we launched a multi-asset fund, we said that we will have a disproportionate share of gold as a proportion because we felt gold is a good asset class in this geopolitical uncertainty. Because of this, we are coming out of COVID, right? Now, part of that geopolitical uncertainty is this tariff, war and all. That is one part. Second part, if you look at, there are two things which determine countries' growth, substantial growth over long periods. One is scale and one is innovation. If you go back to again 2000, 2010, 90s, that period, scale which a lot of European countries and US as a country had got shifted to China as a country, right? Any commodity you look at, over 2000, 2010, they had a 50% to 35% market share in that commodity in terms of production. That means they became a scale producer, so they had a scale advantage. So they determine where the commodity price has to go, right? Very clear. Everybody, if you ask any expert on any particular commodity, he will first talk about China because they have that scale. They build the scale. So that is one thing which creates a dominance for a country. Second thing is innovation. Now let's go back again 20 years back. One of the best performing indices globally is NASDAQ. Lot of innovations happened in all those top 5-6 companies, right? So not only that countries also, if you see long periods of growth, either war, some innovation they do and they grow, right? Now, if you look at last 5, 7, 10 years, again, China has played a part there in innovation. We speak about DeepSeek, we speak about electric mobility, anything you speak about, whether they are at a right product, etc., that we are not here to comment, but they are there in the innovation. And that's a global threat, right? Superpowers, they are threatened by both. Scale is now in their favor, innovation is in their favor.
Yes.
That is where all this tariff war, all etc. are coming through. When this comes through, India is a very small player in all this, right? It's a war happening. It is not actual war, but it's tariff war, whatever you call it. But the scale and innovation war is happening between the countries on the left hand side versus countries on the China, right? In this, what will happen? There will be two things will happen. The first thing is supply chain realignment will happen. A lot of countries today, whether it is Europe or US, when they are procuring products or contents from China or his ancillary countries, they will look at, let me re-establish that value chain, right? That India is in a position. We spoke about a couple of sectors, right, where we have showcased our capability. We will get some share over the next, it might not be immediately because growth slowdown might happen, you get impacted. But if somebody has a 5-7 year view, if you speak to any companies also, they are also waiting for these opportunities. Can I sell more content, right? That is one part to it in terms of content selling more. The second part to it is not only supply chain realignment, because of this imbalance of power shift, there will be currency readjustments also which will happen, right? People say dollar will depreciate, etc. We don't know, but there will be currency readjustment will happen. Here also India can get benefited because of diversification of currency. Might be Indian companies are favored or Indian destination is favored in terms of producing more, or Indian companies itself, because of currency volatility, instead of importing, they will say, why not produce in India, make in India, the concept, right? Whether PLIs are there or not there, companies will start producing domestically so that they need to be away from this supply chain rebalance, right? Like tariff war is happening today. Indian companies who are importing, because of this near-term uncertainty, your freight cost, etc. will go up. So they are facing uncertain challenges from imports, right? They will say, why to import? We can only produce here. So that is again a decadal opportunity for India in terms of import substitution, right? Whether it is assembly or actual production, that happens. You already have seen in last 5-7 years, mobiles, everything is getting assembled in India. And there are so many companies who have seen that 50, 70, 80% earnings growth, right? Like that, slowly and steadily, lot of segments, you will see that things getting produced. That
Which
is
kind of
opportunity.
other than the EMS?
Within EMS also, any industry, like today only mobile phones, everything is assembled in India. Still not, a lot of components are not manufactured, right? All the consumer durables, like all the chair which we are sitting on, there's a lot of things are imported even today, right? The material, the MDF material, the plywood material, everything is getting imported. There's a lot of opportunities for Indian producers are capable enough to produce and sell it, right? So there is large scale opportunity. Why we are talking about consumer companies, even cap goods, like contents which go into railways, content which go into a power plant, a lot of things are imported today. companies have capability. If proper schemes etc. are thrown out, and if the supply chain imbalances remain, companies will set up their own manufacturing here. And as I said, the first statement, India is not levered today. Today there is an opportunity for you to lever your balance sheet and take advantage of this, creating your own manufacturing, right? So these are two opportunities. Go part in this global supply chain. Second is participate in India's own consumption story by manufacturing in India, the Make in India story, right? That is where the positivity is there from us. From medium term perspective, near term there will be volatility, but medium term there's a lot of positivity because of this.
Okay. Before we get into the next segment, I have one
Yes,
last question.
Yes, please.
Where do you see earnings growth going in next 1 to 2 years? Short period. I know long period will definitely grow well, but are we going to see any impact of this trade wars? And because of definitely, see, stock prices are slave to earnings. When
Yes,
earnings growth slows down, automatically we'll see slowdown in stock prices as well. How do you read that in next 1 to 2 years?
So these are outcomes how global policy making decisions are. It's very difficult because he is given a 90-day time frame. Now never know tomorrow what he does, right? So these are the outcomes you have to wait and watch. But in uncertain times, what happens? Corporates don't take any decisions, right? Including we as fund managers, we'll wait out. That is why if you see portfolios, not only ours, a lot of portfolios, they have increased their cash levels. It is not that they are seeing valuations high. That is not the only reason, because there's uncertainty in market. So when you're asking me near term, what will be the earnings growth? It will be uncertain. It could be weak. It could be good also, depending upon how the outcomes are, right?
Okay.
So we have to, in our mind frame, think through that. It will be weak. Single digit earnings growth is what we are internally abiding by. Let's be safe, right?
This year.
Okay. But if somebody is looking at little medium term, earnings growth generally converges around nominal GDP growth, which whatever you are projecting between 11 to 12% earnings growth, and generally earnings converge around that. If you look at long period history also, nominal GDP growth, earnings growth, everything has converged between 2 percentage point, and returns also converge there.
There are outliers, right? In this tough environment also, like where do you see outliers in which
Leaders, which I mentioned, right? Leaders, they will stand out now. Like let's take this example of the supply chain rebalance, right? Today, smaller companies might not have that bandwidth or cash flow because we mentioned, right? Even though earnings growth has been 25%, the cash flow growth has not been 25%. So they don't have the bandwidth today, and because of uncertain environment, banks might not give them loan to go and approach a global OEM even if they get an order. But a large leader, because he has cash flows, he will immediately get order. And he is very strongly looking at orders also. He will grow very faster than the industry. So leaders is what you should focus on in these uncertain times.
Thank you. Now I'll get into the next segment. This is more of a personal questions.
Yes, please.
Okay, more than the markets and all. As a fund manager, where do you invest your personal money?
Equities.
Okay, in equities like large caps, mid caps, small caps.
My own funds.
In percentage.
My own funds.
Oh, you invest in
because
your own funds itself.
My 16, 20, 24 hours a day goes in my own funds, which I do deep understanding, research, etc. Why
is
should
it
I go
because of
anywhere else?
mandate or?
Not mandate. Otherwise also that is where my blood is there.
Okay.
So I believe people say all eggs are in one basket. No, my portfolio is diversified enough. I have done my hard work. Why not put my money? If I only don't believe, then how can I convince investors, right?
Exactly. So if you have 100 rupees today, like how much you put in mid caps, how much you put in small caps, how much you put in debt, any sectors?
Cost of living has gone up
Okay,
significantly. It's 100 rupees, not the saving.
No, I'm just saying 100 out of 100%. Okay.
So on the lighter side, your savings have gone down because the cost of living has gone up.
True.
But where you invest in, I manage multi, mid cap, whatever. Our mid cap size is higher. So my money, which I believe in long term, goes in the mid cap and multi cap side. Okay. That is where even in our business cycle is a diversified fund, right? Or a flexi cap, which my colleague manages, a diversified fund concept, or a large and mid cap. That is where my disproportionate money goes. Now, exact cap curve funds, it doesn't matter. Okay. But it should be more of a diversified fund approach, what we believe in. And within that, a mid cap allocation as well. Because mid cap, if you see category, there are 200, 250 companies. Historically, also last 20 years, they have compounded much higher than the large cap and small cap. There is a reason for that, because they are single focused and they're leaders in their emerging categories, what they operate, right? So they don't have dearth of capital. And second, because they are leaders, they are able to grow that 200, 300 basis point of higher. That is the difference between them and a small cap. Small cap in a tough environment, they find it difficult to raise capital. And in a good market, they raise excess capital also on their sit, and that creates leverage, which we saw in the previous cycle, right? And large cap, because they are not single focused, they are multi focused. There is an issue for them to grow compounding double digit. If you want to take I believe in, if you want to take the power of compounding, mid cap is a good space because the single focused businesses which reinvest in that single focused, and they have that power of compounding because capital is also available for them because they are the leaders in that segment that they operate. So my money goes in mid cap, good amount, and remaining goes in diversified allocations.
You don't invest in direct stocks because you predominantly park in...
As mandates, we are not allowed to. And if I find any stock attractive, I invest in funds, and then becomes somewhere a discomfort saying that why should I personally invest in that? I'm investing in the funds already. Right?
Because of finance. Okay. Yeah, many of us will put majority of our money in equities itself. But if you have to talk about the asset allocation part, like what percentage of your money will be in real estate, debt, and equities?
So family, if you want to talk about, to be very honest, my entire money is in equities, right? My better off, her investment will go into gold, real estate, etc. Better off, I'm not saying only wife, the family part I'm saying, right? They go in real estate, gold and all it. It depends upon individual beliefs, right? But over the period of time, a lot of investments across, not only my family circle, my friend circle, they have moved towards equity because they have realized the power of compounding story, right? So allocations have moved towards equity. But if you want to find an appropriate asset class, etc., it has to be a mix of equity, debt and gold, because it gives you a safety, continuity and the power of compounding. All the three it can address, right? So you should not have single asset class. Because I'm in this field, I'm passionate is what my 100% investment goes into equities. But as a family concept, you look at a family, it doesn't mean only husband and wife, it's an entire family basket. You have to have a combination of all the 3-4 put together.
As a fundraiser, how your day looks like? What do you study? What do you do?
So, because markets are now become more global, it's no more you have to track Indian markets, right? So, one thing has happened, sleep has reduced significantly because you have to look at night markets, day markets, evening markets. And because of the regulatory requirements, multiple things, quarterly results come out. So, let's say this quarter results are from April, it will move till May 15. By the time you will analyze, it will be May end. And then there is 1 month window and you have to meet a lot of companies, understand what incrementally they are thinking through. And then June again the result season starts, right? So our day goes in analyzing. The morning 6 o'clock to night 8, 9 o'clock. Monday to Friday goes in that. Saturday to Sunday goes in understanding deeper concepts. Might be companies, we are giving more time to understanding companies over the weekdays. Weekend goes in understanding more concepts, right? Because learning new, everything is changing day on a daily basis, right? What we mentioned about EV, etc. We need to understand that. I'm not an expert in that. The more you read, the better you understand, right? Saturday, Sunday and all goes in understanding by reading books, understanding the daily, what is happening, understanding on technology, etc., etc. That goes in that. So the entire week is dedicated towards that.
Each person will have few favorite blogs, books and all, which they follow meticulously. Okay, which kind of blogs or books, magazines you follow on regular basis?
So, books in the sense, I don't look at too much of investment guru books and all, because things keep changing. And my personal belief is a lot of books get sold because they want to earn their remuneration, right? There is nothing, I believe one thing, market mein there is nothing right and wrong.
True.
Sometimes value works, sometimes growth works. That is why in Hindi we say sabka circuit lagta hai, right? That is why we say keep doing the same thing day in and day out, right? If you're a trader, keep doing that. Then one day you will make money in the hope if you have capital more. So why I believe reading books and all, you will slay to one side. What I believe in, I follow some people, their advice. So I follow a lot of channels or lot of their interviews. So 3-4 people whom I follow, right? So Manish Chukani is one person. I really follow him because because he used to be an institutional broker. Now he has turned as an investor. But I used to one-on-one meet him. Now I see through his interviews, etc. A lot of validation I get from him. Other than that, couple of people whom I worked with, where I listen to them, I read about them. Madhusudan Kela, who I worked with, a lot of learnings from him when I worked with him. And also when we talked to him, like go back 5-7 years back, he spoke about PSUs. That gave me an idea how to look at that, right? How to look at. So it is a circle, you keep learning from those people, right? They might also be learning from you.
CDMOs.
Yes. So they might be working, learning from you also. It's learn from everybody, right? Everybody every day is a learning exercise. And the people currently whom I'm working with, when I speak to them, will learn. Like our CIO, Australian CIO, Mr. Krishna Kumar, I've learned a lot from him. Current our CEO, Mr. Anand Radhakrishnan, a lot from him. My colleague Bharat, he's 20 years in research. A lot of things I learn from him. He learns from me. We keep discussing on a day in, day out. You ask me what my day goes. 12 hours is dedicated to him. Full time we keep discussing on companies, research, etc. So these 3-4 people, I have learned a lot, and I keep learning. Rather than reading about books, no, because it's on the job, you keep learning a lot of things.
True. And their experience teaches a lot. Reduces a lot of time.
Right. And just one last on, not only on markets, right? Outside markets also, a lot of people I follow, I'll not name them. They give you an idea how to look at the world, right? Because at the end, market is not only earnings, stock price, balance sheets. Because promoter mindset also you need to understand, right? A broader framework you need to understand. So you look at a lot of leaders, qualities, what they, when they have that emotional and inspirational speeches, you learn from them. Not that you're following them, but you learn from them certain words, certain traits, and you try to see historically has that worked? Yes, then you follow it here, right? That is how you find successful promoters running successful businesses.
Nice. Thanks a lot. Actually, it was a wonderful interview. I'm sure my viewers got a lot of info out of it. Before we end this interview, if you want to add few points to the viewers, anything you can add and we can close it.
I think we have covered everything. I'll just say that be nimble and be humble. Even if you have become rich in the last 5 years, be calm. You might lose that money also, right? You will gain, lose. That's a market cycle. So market you will lose. So somebody gains, somebody loses, right? You have to be humble, be for long term. You will find that advantage what is there in markets. And believe in the power of compounding. I'll only stay there and stop. Thank you so much.
Thank you, Ratish.
ఇప్పుడు ఈ ఎంటైర్ వీడియో నుంచి కొన్ని ఇంపార్టెంట్ టేక్అవే పాయింట్స్ ఏవైతే మీకు తెలుగులో సమ్మరైజ్ చేస్తాను. ఫస్ట్ మనం యాక్చువల్లీ తీసుకోవాల్సిన ఇంపార్టెంట్ పాయింట్ ఏంటంటే ఆయన రీఎంఫసైజ్ చేశారు చాలాసార్లు. మనం ఏదైతే కంపెనీస్ ఇలాంటి మార్కెట్ కండిషన్లో పికప్ చేస్తామో ఆ కంపెనీస్ వాళ్ళు ఉన్న సెక్టర్లో మార్కెట్ లీడర్ అయి ఉండాలి. నా మార్కెట్ లీడర్ అనగానే లార్జ్ క్యాప్ కంపెనీసే అవ్వాల్సిన అవసరం లేదు. కొన్నిసార్లు లార్జ్ క్యాప్ అవ్వచ్చు, కొన్నిసార్లు మిడ్ క్యాప్ అవ్వచ్చు, కొన్నిసార్లు స్మాల్ క్యాప్ అవ్వచ్చు. నువ్వు సిరామిక్ ఇండస్ట్రీ తీసుకున్నావు అనుకోండి, ది లార్జెస్ట్ కంపెనీ కజారే ఏదైతే ఉన్నదో ఇట్స్ ఏ మిడ్ క్యాప్ కంపెనీ, లార్జ్ క్యాప్ కంపెనీ కాదు. దో ఇట్స్ ఏ మార్కెట్ లీడర్ అన్నమాట. ఆయన ఏమంటారంటే ఇలాంటి మార్కెట్ లీడర్స్ ఎవరైతే ఉన్నారో, కజారా ఈజ్ ఎగ్జాంపుల్ తీసుకున్నాను, బట్ వేరే సెక్టర్స్లో ఈ మార్కెట్ లీడర్స్ ఎవరైతే ఉన్నారో ఈ మార్కెట్ లీడర్స్ దగ్గర చాలా వరకు క్యాష్ ఉంటుంది. ఇలాంటి టఫ్ మార్కెట్స్లో వాళ్ళ క్యాష్ని బిజినెస్ని గ్రో చేయడానికి రీఇన్వెస్ట్ చేస్తారు. ఆ రీఇన్వెస్ట్ చేయడం వల్ల ఇంకా ఫర్దర్గా వాళ్ళు మార్కెట్ షేర్ అయితే గెయిన్ చేయగలుగుతారు. ఇలాంటి కంపెనీస్ అన్నీ కూడా మీకు చాలా మంచి రిటర్న్ డెలివర్ చేస్తాయి. ఇక్కడ యాక్చువల్లీ మనకి మెన్ వర్సెస్ బాయ్స్ డిఫరెన్సియేషన్ అనేది క్రియేట్ అవుతుందని చెప్తున్నారు అనమాట. ఎస్, లాస్ట్ మార్కెట్లో మనకి ఏ స్టాక్స్ పడితే ఆ స్టాక్స్ పర్ఫామ్ చేస్తాయి. ఈవెన్ ఎక్స్చేంజ్ ఫైలింగ్లోని ఆర్డర్ వచ్చిందన్న స్టాక్ పెరిగిపోయింది. బట్ అలాంటి ఆర్డర్ వచ్చాయని స్టాక్స్ ఏవైతే పెరిగాయో మన జెన్సాల్ లాంటి ఎగ్జాంపుల్ చూసాం కదా, ఆర్డర్కి రియల్గా క్యాష్ జనరేషన్కి మధ్యలో చాలా గ్యాప్ ఏ ఉంటుంది. అలాంటి కంపెనీసే మనకు చాలా వరకు పెరిగి ఉన్నాయి. కాబట్టి ఇలాంటి రిస్క్ ఏదైతే ఉన్నదో దాన్ని అవాయిడ్ చేయడానికి ఆయన ఏమంటారంటే ఫస్ట్ మీకు తెలిసిన కంపెనీ ఏదైతే ఉన్నదో ఆ బిజినెస్ని ఓన్ చేయండి అని. మనం చేసే పెద్ద పొరపాటు ఏంటంటే యాజ్ ఏ రీటైల్ ఇన్వెస్టర్స్ మన కళ్ళ ముందు కనబడుతుంటుంది, ఓకే ఇక్కడ చాలా మంచి గ్రోత్ వస్తుందని చెప్పి, అయినా కూడా మన కంపెనీని వదిలేసి ఏవో పెద్ద పెద్ద అడ్వెంచర్స్ అన్నమాట. అంటే ఈ సెక్టర్స్లోని ఇలా జరుగుతుంది, అలా జరుగుతుంది, ఈ స్టోరీస్ వెనకాల మనం పరిగెడుతూ ఉంటాం. సింపుల్ ఎగ్జాంపుల్ మనం తీసుకున్నట్టయితే మన కళ్ళ ముందే జరిగింది భారతీ ఎయిర్టెల్. ఓకే, టెలికమ్యూనికేషన్ యాక్చువల్లీ డ్యూపోలే అయిపోయింది మాట్లాడుకోవాలంటే. 3-4 ప్లేయర్స్ ఉన్నా కూడా 2 కంపెనీసే మెజారిటీ ఆఫ్ ద మార్కెట్ని మొత్తం వాళ్ళు డామినేట్ చేస్తున్నారు. ఇలాంటి కేసులోని మనకు ఆ కంపెనీస్ గ్రో అవుతాయి కదా. దాన్ని బెస్ట్ ఎగ్జాంపుల్ భారతీ ఎయిర్టెల్ లాస్ట్ 5 years రిటర్న్ చూడండి, స్టాక్ డెలివర్ చేసింది. దో ఇట్స్ ఏ లార్జ్ క్యాప్ కంపెనీ 250% రిటర్న్ డెలివర్ చేసింది. అదర్ ఎగ్జాంపుల్ మహీంద్రా అండ్ మహీంద్రా లాస్ట్ 5 సంవత్సరాల్లోని 700% క్లోజ్ టు రిటర్న్ డెలివర్ చేసింది. అంటే 5 సంవత్సరాల్లో 7 బ్యాగర్, అంటే ఆల్మోస్ట్ ఎవ్రీ 100% కన్నా మనకి బెటర్ రిటర్న్ డెలివర్ చేసినట్టే కదా. దో లార్జ్ క్యాప్స్ అయినా కూడా మనం ఇలాంటి కంపెనీస్ని ఇగ్నోర్ చేయకూడదు అన్నది. మీకు స్మాల్ క్యాప్స్ కూడా ఈ టైంలో బాగానే పెరిగాయి, కానీ మనకి ఆల్రెడీ బాగా వెల్ ఎస్టాబ్లిష్డ్ బిజినెస్లు వాటిలో రిస్క్ అనేది తక్కువ ఉంటుంది. మన కళ్ళ ముందు ఆ బిజినెస్లు కనబడుతుంటాయి, వాళ్ళ ప్రొడక్ట్స్ కనబడుతుంటాయి. సో అలాంటి కంపెనీస్ని ఇగ్నోర్ చేయొద్దు. అండ్ ఎస్పెషల్లీ ఈ మార్కెట్ కండిషన్లో ఏవైతే కంపెనీస్ నామినల్ జీడిపి అంటే మన రియల్ జీడిపి ఏదైతే ఉందో దాని యొక్క గ్రోత్ ప్లస్ ఇన్ఫ్లేషన్ యాడ్ చేసినట్టయితే ఏదైతే నెంబర్ వస్తుందో దానికన్నా బెటర్ గ్రోత్ డెలివర్ చేసే లార్జ్ కంపెనీస్ ఏవైతే ఉన్నాయో వాటిని అయితే పిక్ చేయండి అని చెప్తున్నారు. అండ్ అలాగే కన్జంప్షన్ డ్రివెన్గా ఎస్పెషల్లీ మనకి అర్థమయ్యే బిజినెస్లు ఏవైతున్నాయి వాటిల్లో ఇన్వెస్ట్ చేయడం బెటర్. ఎందుకంటే ఇప్పుడున్న మార్కెట్ కండిషన్లోని మన గవర్నమెంట్ ఒక స్పెండింగ్ ప్యాటర్న్స్ ఇవన్నీ కూడా చాలా వరకు చేంజ్ అవుతాయి. కాబట్టి లాస్ట్ సైకిల్లో గవర్నమెంట్ వేరే సెక్టర్స్లో స్పెండ్ చేసింది, ఆ సెక్టర్స్ అన్నీ కూడా లాభపడ్డాయి. వేరేస్ ఇప్పుడు గవర్నమెంట్ ఒక ప్రయారిటీస్ మారినప్పుడు మన గవర్నమెంట్ స్పెండింగ్ మీద డిపెండ్ అయ్యే సెక్టర్స్ ఏవైతే వాటికన్నా కూడా యాజ్ ఎ కన్జ్యూమర్ మన యొక్క ఏదైతే స్పెండింగ్ ఉంటుందో ఆ స్పెండింగ్ ప్యాటర్న్స్ ఆధారంగా మనం ఇన్వెస్ట్ చేసినట్టయితే బెటర్ రిటర్న్స్ అయితే చూస్తామని చెప్తున్నారు. అండ్ దీనికి ఈ టెలికమ్యూనికేషన్ ఇవన్నీ మాత్రమే కాకుండా ఇవి జ్యువెలరీ రిలేటెడ్గా అని చెప్పారు. మనకి వర్కింగ్ ఉమెన్ ఎవరైతే ఉన్నారో వాళ్ళు గోల్డ్ జ్యువెలరీలో ఇప్పుడు ఫ్యాషన్ జ్యువెలరీ సైడ్ మూవ్ అవుతుంది. ఈ ఫ్యాషన్ జ్యువెలరీ ఏదైతే ఉన్నదో ఇక్కడ యాక్చువల్లీ జ్యువెలరీ కంపెనీస్కి చాలా మంచి మార్జిన్ మిగులుతుంది. అందుకని జ్యువెలరీ కంపెనీస్ అని బాగా పర్ఫామ్ చేస్తారని ఆయన వ్యూని షేర్ చేశారు. అండ్ QSR యాజ్ ఎ స్పేస్ మనం చూసినట్టయితే లాస్ట్ 2 to 3 ఇయర్స్లోని మార్కెట్ పెద్దగా పట్టించుకోలేదు. బట్ ఈ QSR స్పేస్లోని ఏదైతే స్టోర్ ఎడిషన్ వాళ్ళు చేస్తున్నారు సిటీస్ ఒక ఎక్స్పాన్షన్తోని ఆ స్టోర్ ఎడిషన్ వాళ్ళకి చాలా మంచి గ్రోత్ తీసుకొస్తుంది. అండ్ మనకు తెలుసు ఎక్కడ ఏ QSRకి వెళ్ళినా కూడా మన KFC లాంటి వాటికి వెళ్ళినట్టయితే క్రౌడ్ అయితే చాలా ఉంటారు. అండ్ కంపెనీస్ వాళ్ళు అప్సెల్ చేస్తున్నారు, న్యూ ప్రొడక్ట్స్ వాళ్ళు ఆఫర్ చేస్తున్నారు. మనం ఇప్పుడు డామినోస్కి వెళ్ళామనుకోండి ఓన్లీ పిజ్జా మాత్రమే కాకుండా వాళ్ళు వెరైటీ ఆఫ్ అదర్ ప్రొడక్ట్స్ని కూడా ఆఫర్ చేస్తున్నారు. కన్జ్యూమర్ ఒక ఇంట్రెస్ట్ ఆధారంగా వాళ్ళ ప్రొడక్ట్ పోర్ట్ఫోలియో యాడ్ చేసుకుంటూ వెళ్తున్నారు. ఇక్కడ నుంచి చాలా మంచి సేల్స్ గ్రోత్ అయితే చూస్తారని చెప్తున్నారు. సో ఇలా ఆయన ఏవైతే సెక్టర్స్ గురించి మాట్లాడారో ప్రిడామినెంట్లీ మనకి ఒకే మెసేజ్ క్లియర్గా చెప్తుంది ఏంటంటే మనం వాడే ప్రొడక్ట్స్ ఏవైతున్నాయో ఇలాంటి మార్కెట్ కండిషన్ని ఆ కన్జ్యూమర్ ఫోకస్డ్ కంపెనీస్ ఏవైతున్నాయో వాటిలో మార్కెట్ లీడర్స్ ఎవరైతున్నారో వాళ్ళ మీద ఫోకస్ చేసినట్టయితే మాత్రం డెఫినెట్లీ యాజ్ ఎ ఇన్వెస్టర్ మనం డబ్బులు కోల్పోము. ఎందుకంటే మనకి జెన్సాల్ లాంటివి మనకి తగలవు అక్కడ. ఎందుకంటే ఆల్రెడీ మనం చూస్తుంటాం వాళ్ళ ప్రొడక్ట్స్ మార్కెట్లో సెల్ అవుతుంటాయి అండ్ బాగా గ్రో అవుతుంటారు. అండ్ మనం యూజ్ చేస్తుంటాం యాజ్ ఎ కన్జ్యూమర్ మనకు ఆ సాటిస్ఫాక్షన్ ఉంటుంది. అండ్ ఇన్ఫ్యాక్ట్ టెలికమ్యూనికేషన్కి అగైన్ వస్తున్నాను ఈ వీడియోలోని ఎంఫసైజ్ అయిన ఇంకొక పాయింట్ ఏంటంటే ఆయన చెప్పిన మాట నిజమే కదా. ఇప్పుడు లెట్స్ టెలికమ్యూనికేషన్ కంపెనీ మనకి ఇప్పుడు యావరేజ్గా మంత్లీ 200 రూపాయలు ఛార్జ్ చేస్తుంది. వాళ్ళు 300, 400 చేసేసిన స్లోగా మనం కంప్లైంట్ చేయాలంటే మనకు అది నెసెసిటీ అయిపోయింది కదా డేటా. సో ఇలా నెసెసిటీ అయిపోయిన ప్రొడక్ట్స్ ఏవైతే ఉంటాయో అండ్ దట్టు మన కన్సాలిడేట్ అయిపోయిన ఇండస్ట్రీస్ ఏవైతే వాటిలో గుడ్ క్వాలిటీ కంపెనీస్ని మన కళ్ళు ముందు కనబడుతున్నా కూడా మనం ఇగ్నోర్ చేస్తుంటాం. అలాంటి వాటిని ఇగ్నోర్ చేయకుండా మన పోర్ట్ఫోలియోలోని ఇలాంటి స్ట్రాంగ్ కంపెనీస్ యాడ్ చేసుకున్నట్టయితే మాత్రం ఈ సైడ్ వేస్ అండ్ బేర్ మార్కెట్లో కూడా మనం మంచి రిటర్న్స్ అయితే సంపాదించగలుగుతాం. ఇది ఈ వీడియో నుంచి మీకు షేర్ చేయాలనుకున్న కంప్లీట్ ఇన్ఫర్మేషన్ గైస్. వీడియో నచ్చి మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీ మెంబర్స్కి హెల్ప్ఫుల్ అవుతుంది అనిపించినట్టయితే తప్పకుండా వాళ్ళకి షేర్ చేయడం మర్చిపోకండి. వీడియోని లైక్ చేయనట్టయితే వీడియోని లైక్ చేస్తూ మిగిలిన ఆల్రెడీ మనం చేసిన ఎక్స్పర్ట్ సిరీస్ ఇంటర్వ్యూస్ ఏవైతే వాటి యొక్క ప్లేలిస్ట్ని మీకు ఇక్కడ ఎంటకాల్లో ఉంచుతాను. మిస్ అవ్వకుండా చూడండి. నేను సాయి కృష్ణ పత్రి మరొక మంచి వీడియోతో మీ ముందుకు వస్తాను. టిల్ దెన్ బై బై, టేక్ కేర్.